My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 18th, 2021, and Bitcoin is looking like it's in a downtrend. I've been saying this for the past 2 episodes, I believe, but I could have been saying this for the past however many episodes, since maybe 8-9 episodes, right? Because the downtrend began around the 8th or 10th, right? So we are in our 5-wave impulse, as we've stated, as we've been saying, right? And this is the power of Elliott wave theory, right? A lot of people out there get by without it. Well, I think they're getting by. I don't know if they're trading seriously, but I can't imagine trading consistently, charting consistently, successfully without this knowledge. I mean, it's invaluable, right? Because not only are we getting short-term moves, but we're getting long-term moves. We're getting context, right? And in this sort of, if you get a good wave count and you confirm it, right? In yesterday's episode, I basically redid the wave count here. And you know what I don't necessarily like? I don't like Elliott wave analysis that shows you 10 different wave counts. It's like, how is that helpful? You know, like, what can I do with that? How is that actionable, right? So we redid our wave count because we looked at this and we said, we don't know what it is, but let's take what we know, or what we don't know. Let's identify or isolate what we don't know and try and see what we do know, right? And if you want, just watch yesterday's episode, November 17th episode of the Daily Bitcoin Update. But by doing that, we determined that this is likely a truncated third wave. Truncated in the sense that it only extends to the one Fibonacci extension of this one wave, not necessarily the 1.618 or the 2, as typically you find 2 waves, or 3 waves rather. Now, if this is 1 and this is 1, right? If, let's say, this is a hair longer than this, then 5 cannot be any longer than these. Why? Why do we know that for sure? We know that for sure because the principles of Elliott wave theory state that the third wave, there's only like 3 or 4 rules, right, in all of Elliott wave theory. The third wave can never be the shortest wave. It's usually the longest, but it can never be the shortest. So if this is a one extension of this, this must be shorter than both of these. So this is why this wave count makes sense. Also, the time we've spent in this correction, and this is a correction for sure, right? There are certain things that you can say almost for sure. Corrections usually happen, or corrections usually take you in a range of price action and hold you in that range for quite some time. And this is exactly what we've done, right? We've been in this range. No, not since then. Let's try that again. We've been in the range of, let's say, okay, let's try this one more time. We've been in the range of 61.5 to 58.7 for approximately 2 days. Okay, that's an eternity in crypto time. We're so impatient, right? And whatever, we are what we are. 2 days, a little more than 2 days. Okay, this is very, very characteristic of a correction, right? It's not an impulse. Let's say we had an impulse. It's a correction because we've been in something for a while. This is exactly what happened here, except longer, right? This is why I was saying the 2 was the complex correction. The 4 should be the simple correction by the law of alternation. So usually you'll see that if one wave lasts, let's see, X time, then the other wave, that simple, lasts X over 2 times, so half of the time, more or less. So this lasted 4 days and 20 hours, the 2 correction, right? And then the 4 correction, so far, like I said, has lasted approximately 2 days and 4 hours. So do you see that? The law of alternation makes sense and it's consistent. And I welcome you if you're into charting, into Elliott wave theory. You don't even have to be into Elliott wave theory, but this is so interesting. Go ahead and backtest it. Look at 2 waves and 4 waves. Compare the time that price action spent in the 2 wave and the 4 wave and see just time-wise how long one versus the other. Usually you'll get the complex correction be twice as long or around twice as long as the simple correction. And why is that? Fundamentally speaking, you're giving market participants the time to decide if they want to buy or sell. It's just a respite from the impulse. That's all it is, the impulsive trend. The other thing I want to point out is that the 4 wave fundamentally is the time where market participants think, oh, the downtrend or whatever the trend, the impulsive trend must be finished. Finally, we're going to reverse. But what they don't know is that there's one more leg down. That is the trap of the wave 4. It very much looks like a reversal, but it's not. Okay? And only savvy investors, savvy traders can distinguish wave 4 from the end of the wave reversal. Okay, so that's also something, one of the reasons you may see, I always say this, your favorite crypto analyst, your favorite crypto influencer say, all right, I see some bullish divergence on the 4-hourly time frame. We must be rounding the corner. We must be reversing course. That's the issue. You have to really understand the nuances of the 4th wave. The 4th wave is meant to trick people into thinking reversal is sooner than later. Okay. And I've been personally tricked by it so many times, making entries on longs in wave 4 when there's one more leg to the downside. How can you identify a wave 4 versus the end? One, you can count the waves, right? Obviously, you have 3 impulses to the 3 positive impulses and 2 negative sort of corrections, right? 5 waves, 3 of them are impulsive, 2 of them are corrective. So if you count that you're in the 4th wave, obviously you haven't made 5 waves. But that's easier said than done because it's not always easy to count waves. The other way is to use your stochastic RSI indicator, okay? Or use your RSI indicator, whichever one you like. I prefer stochastic RSI because I think, the RSI is just too much price action. I have my price action. I don't need more price action and a momentum indicator. Anyway, you count your waves in the stochastic RSI. That's one wave very clearly, right? That's the top of wave 1. That's wave 2 at the bottom here, right? And let me make this a little bigger. And I always do this, but just for new subscribers and those that haven't seen this kind of analysis, here, let's bring the price action back in. Top of wave 1, you can see it here. Bottom of wave 2, or bottom of this stochastic RSI indicator, which is wave 2, the complex correction. Look at the complexity versus this, the simplicity in wave 4. Do you see? Top of wave 3, right? Bottom here is wave 4. Then you're going to get the top here, which is going to be wave 5. Again, it's a little counterintuitive because we're going down. So you're like, oh, wait. Why are we going to top out if we're going down? Because it's a downtrend and this is a momentum indicator. So if the trend is downwards, then the momentum shows you the lowest part at the top, okay? So please don't get confused. So the top of this is going to show you wave 5. We haven't hit the top yet. That's how you use this stochastic RSI. A lot of people, who are kind of novice will say, oh, this is the top, right? We're definitely, this is the top. We're going to wait till we bottom before sort of we buy. But then they neglect the context, which is the 3 tops in a wave impulse, right? You always need 3 tops, 2 bottoms for complete wave impulse, okay? And we can already start talking about taking profit. So if you're in a short, if if you follow this channel, you know that we've been short ever since, the top of wave B. Now, you could have entered over here, you could have entered over here, and you could have entered over here. I always say, use these corrections in an impulse, not to long, use these corrections in an impulse as entries. 2-wave correction is a good entry. 4-wave correction, good entry. It's not an opportunity to counter the trend, right? Not financial advice, but if you want to be a consistent, sort of responsible trader, right? You do not enter these trades as, oh, we're bottom of wave 2, let me long this. You can, but that's, high risk. There's too much risk involved. And, the more risk you have, you're not looking at how much money you're making on one trade or another. You're looking at how consistently you win trades. That's how you can make a living trading. That's how you can be a profitable trader and not lose your shirt like most people do. Most people who trade lose because they don't have systems. You want to make a good system, and a good system understands that you're trading the trends. You're playing the numbers. You're playing probabilities. So if you recognize an impulsive wave to the downside, use the 2-wave, use the 4-wave as entries to the bottom, right? So try to enter at the top of 2, try to enter at the top of 4. Yesterday, when I said in yesterday's video in my analysis, I was talking about how a great entry, if this is indeed a 4-wave, is to simply take your Fibonacci retracement tool from the top of wave 3 to the bottom and look at the 382. Why? Because we all know that wave 4 retracements cannot exceed the 382. So if this is indeed a 382, whatever you do, you enter your short at the top of this range or somewhere near the top of this range, put your stops literally right behind the 382 on whatever your chart is, and you should be safe from being stopped out, okay? And that was my sort of technique for entering on this 4th wave retracement. You can do that. You can literally rinse and repeat that method. You could have done that for the 2nd wave, and except right behind the 618, because we know that wave 2 cannot retrace beyond the 618, right? So this is kind of, you do the same thing for longing, when you get the 2 and the 4 wave retracements to the downside, okay? So this is pretty much what I do. I'm showing you my system. I trade high time frame impulses, and I use that as my trade setup. Even if I make low time frame entries, I'll use the high time frame sort of markers, Fibonacci markers, as my entry and exit points, my stops, to plan my stops, and that has proven very fruitful. The other thing, now that, let's say a lot of you are in this trade, you've been short, right? One way you could still lose this trade? One, you don't want to mess around and trail your stops too much, because these corrections sometimes are just too unpredictable. Okay, we can read them relatively well, but still you don't want to get overconfident, right? We read an A, B, C, and let's zoom in really quickly. I want to show you something, and this is part of just learning to read these charts and learning your corrections, learning your patterns. What do you see here? And let me just draw this out. So this is clearly a triangle correction, and we talk about how this is A, this is B, right? Our B wave, we love to point this out on the channel. The B wave, boom, right? We see that B wave all the time, and I'm going to point it out. I'm going to keep pointing it out. The C wave is an impulsive wave, okay? We see 5 waves up in C, and when you think of an impulse, you think of that 5-wave zigzag, right? But what some people don't think about is the diagonal, or the triangle as it's called, in a corrective mode, right? So diagonals are what you call sort of triangles in impulsive waves, and in corrective waves you call them triangles, okay? And then because they're corrective, you don't use numbers, you use letters to denote them. So this would be A, B, C, D, E. And each and every one of these is 3 waves. So it's 3, 3, 3, 3, 3, right? So if you knew that, right? If you know your stuff, you can read complex corrections. You can read simple corrections. So you would have read this as the following: A, B, C. And that's the end of the correction. You would have known that this is the beginning of the 5 wave, okay? Or wave 5. And you would have known that this was the top of wave 4 just by counting A, B, C, D, E. 5. Again, you see that number 5 is what you always get in a complete impulse or a complete corrective pattern that's impulsive, okay? So that's something I wanted to point out. Learn your triangles, learn your diagonals. You'll see them. Once you recognize patterns, then you can make better entries, and you kind of know what's going on in all of this mess. Most people can't make heads or tails of these messes, these corrections, right? If you can get corrections, if you can master corrections, you will be so profitable as a trader. You will be so consistent because you'll know how to make entries and exits. Granted, even still, I do not kind of try and trade this. I try to make entries on this again, and I still put my stops behind the 382 because you never know. You may misread the corrections. All right, last part of this is going back to what I said. How can you still lose this trade? By not taking profit. Because you know what happens after 5 wave impulse? You get a serious, violent correction. And that correction is going to be your 2 wave. If this, zoom out to the 4 hourly, if this is wave 1 of the larger impulse down, wave 2 is going to smoke a lot of people, even people that have, they entered all the way up here, right, on their short. If you don't take profit soon enough, that wave 2 will come at you really fast, okay? So you want to be conservative, and I mention this all the time. If you want to be a profitable trader, you want to be a consistent trader, not only do you know how to enter well, you know how to exit well. And good exits are conservative exits because you never know, okay? So what's the conservative exit on this? So 2 ways to project the end of wave 5. How? 1, by taking the inverse 1618 of the 4 wave, okay? So the bottom of wave 4 to the top of wave 4 is about here. And the 1618 projection, okay? It can go between the 1236 and the 1618. The 1618 is the most likely one, and it gives you 56.5, okay? So let's take that, keep that in mind. The second way to project the end of wave 5 is to use the Fibonacci extension tool. The top of wave 2, right? We call it top of wave 2. Bottom of wave 3. And retracement of wave 4, which is once again here. And the 618 extension of that gives you 56.2. So between 56.5 and 56.2. If I'm conservative, I'm going to take profit at 56.5. In addition, a member of the community, I think Daniel, mentioned that 56.5 is a crucial node on the yearly chart, okay? 56.5 is a crucial node on the yearly chart. I don't even know if I have the yearly chart. Let's just go on the weekly. We turned on the VPVR. Okay. And Daniel, please correct me if I'm wrong. I think you said yearly chart. In any case, 56.5 is a crucial node. We do see on the VPVR on the weekly time frame that we do have a node, a strong level of support it will be since we're above it at 56.5, right here. So this is very likely that's where I'm taking profit and getting ready for my longing the 2 wave, okay? So that's pretty much it for me. Hope that was helpful. Hope that was useful. Like, share, subscribe, and I'll see you guys soon.